that. There's a little warning signal. It's good to be back in New York, Tim. Not gonna lie. As I adjust my camera. Good to see a few faces here. Jed, you look like you're in the home office in Colorado. Is that correct? Nice to see you. And there's, I know somebody that's here today that should be taking the day off, but I'm not going to call them out.
But you know who you are. Is that me, Joel? Is that me? Did I go?
Maybe.
I didn't know how to join.
All right. Well, we'll give everyone one more minute to settle in. So put your cream in your coffee. Put some ice in your ice water. We'll get rolling here in about 60 seconds. I see a few new names, Tim. Yeah.
Yeah. This is that community conversation has just fired up a lot of participants discussing this, I don't know, new season of sales, new season of projects.
Very yes. Cute. Is it, can we call it a pattern yet? Almost, maybe, hopefully. Since our spidey senses are all tingling.
Yeah.
Right.
Well, it's definitely confirmation everywhere we look. Yeah.
All right. So I think I'll kick us off here and say, welcome to the weekly briefing, where today we're going to talk about pent-up demand, which is something that's really been what, Tim, this has actually been kind of an ongoing topic almost this entire year. Because yes, we saw the slowdown starting to come last fall, and then it really kicked in, especially around the turn of the year. And now we've seen owner after owner who, these studios and production companies all around the world, but especially in the US and Canada, saying this has been the worst quarter in our company's history. This has been the most terrible, downside, and everyone's asking this question: should we lay people off? Should we cut our expenses? All these kinds of things. And now we're starting to see some things shift. But let me say this first. The weekly briefing is 30 minutes where Tim and I get together each week and share with you guys what we're seeing in the industry and talking about what to do about it, or what's the latest trend, what's the insight behind it. Tim, you want to say hi and tell us what's your quick take on where we've been and what's the conversation happening inside the community?
Yeah, sure. Yeah. Welcome to the weekly briefing. This is once a week that Joel get to catch up with all of you, give you an understanding of what we've been hearing and process what's going on in the community. This really is inspired by all of you in community recognizing a pattern of a slight uptick in sales. The thought process is that some of the pressure that we've been seeing build up since late last year and in the winter might be beginning to be released. And the theory behind that was that many of these clients were doing cutbacks, managing their own large corporation cash flow issues, and put projects on pause or release projects at a slower pace than they've been doing for years now. And that created a hiccup in our pipeline, in the approval process or the cash flow process that we've been walking through. And it's made for a lot of desperate situations and a lot of concerns. And we're wondering now, has that pattern worked itself out in a normal spring way? Or are there other kind of larger factors at work that might be playing into this economy as well?
So Tim, by the way, can you unshare your screen so everyone can see our lovely faces full screen, or with apologies. So let's mention this, Tim. So there was a thread that Andre Foster, I think, from First Fight started, was it yesterday? I think, in the community.
Yeah.
And I just checked it. It already has over 50 comments. And what was the subject of the thread was, is it over yet? So Andre was simply asking like, hey, are we through the worst of it? Right. Trying to get a temperature from everyone as far as this nightmarish, hellish slow time we've all been trying to make it through. Have we hit the bottom? And what I thought was really interesting was this very much like the responses that people were dropping very much aligned with what I previously been calling anecdotal evidence. About a week and a half ago, I had one owner that I'm working with. It's like, wow, this 7-figure job just awarded after all these months of it's on hold, it's postponed, it's canceled all of a sudden. And I was like, well, that's something. What's behind that? And then there was another anecdote and another anecdote and another anecdote. And I thought, well, there's not enough here that I can say this is a trend. But of the 50 or so comments in that thread, I'm starting to feel a trend. And I don't know if it's right. I don't know how much evidence I need to call it a trend, but what are you seeing?
Yeah, I sit in a different position. I sit on cash flow calls where we're looking at current cash runway for clients. And we add onto that cash runway future opportunities, sales that are coming in. And we have some win-loss ratio elements we put into that discussion to determine how much can we count on for future cash. And I'll say it has been more requests. It does seem like there's more chatter, more opportunity, more people filling in their sales pipeline. So there's definitely an element of work is starting to come our way. The win-loss ratio, it feels like, how can I say it? I feel like people are taking temperature more. So what feels like should be a pitch really was a curiosity. Would you guys be interested in a project like this? But then that fades away sooner than before, where I guess we're familiar with being interested would mean they would engage us in a pitch process right away or start the award process as soon as possible. And I feel like they're just taking temperature right now in that element. And then some of the requests for projects that are awarded, maybe like your seven-figure project or other ones I'm seeing is, oh, we're not going to do regular payment terms. We're actually going to extend the payment terms to net 90 or worse in some scenarios. So the ones that are awarded are also have these other kind of negotiations that are cash burden on clients. So it feels good to have wins. It feels good to have chatter. It feels good to be part of it, but there's a new part of the economy that's coming up with to manage as we accept these projects.
So here's another anecdote I noticed. I'm curious, Tim, you and I haven't talked about this, so I'm going to give this to you in real time. Live, exactly. So I'm thinking of probably 2 or 3 studios where they were telling me, oh, this one job, nothing huge, just this one job or these 2 jobs awarded. And I'm saying, okay, that's good news. Where did those come from? Oh, that's that deal. I'm like, wait a minute, you mean the one that we were talking about back in January? They said, yeah, they just finally called and they awarded. And I said, what's odd is typically if you're running, if you're in the studio creative business, when a job postpones, goes on hold, into limbo, give it a month, it's dead. Like if it doesn't convert within about a month, forget about it. And those almost never come back in the form of 3 or 4 months. I mean, we're talking 4 months later. Oh, what we told you about that money being on hold was actually true. The money's not on hold. We're awarding you that job. And I thought that's different. That's pent-up demand, I think. Now, still very anecdotal. I can't say there's enough data there for a trend, but when I hear of several clients saying, hey, that thing that we started talking to you about in January, we're actually ready to award. Can you get started? That's, to me, is just conspicuous.
That actually, it matches some of the patterns I've been seeing too. For me, like it's still all this sets way back in November when the slowdown of requests is what we first saw. And really some projects that we thought were going to be awarded just were all of a sudden put on pause. So these are economic issues outside of our industry, right? These are large corporation issues, Wall Street issues, banking issues, and what have you. When interest rates rise, cash freezes up and people have to pivot. So large agencies or large corporations were basically putting things on pause, waiting till they figured out their cash. And they do it slower. They're doing it on a quarterly basis, not a week by week or month by month basis. So when we saw that happening in the end of last year, Q4, clearly that had an impact on Q1 because the decisions were being made over that quarter that impacts the first quarter. And we saw layoffs, we saw freezes, no projects, that's what we've been living out. But now over the last 12 weeks, those clients have been working out what would we be able to do this year? How could we begin these projects? And so now that the Q2 is started and people are starting to work through that process, now we're starting to see the engagement picking back up. It all makes sense pattern-wise. It's just slower than we want it to be, isn't it? We want things to match our terms. And that's why my speculation is they're awarding projects that wouldn't pay till Q3. So they have even one more quarter to work out cash issues on the corporation side that are impacting us on the small business side.
I'm such an optimist, right? That I have to be careful not to make predictions because I want to think that a month from now or by the summer, it's all going to be great, right? It's going to be like the good old days. And I obviously shouldn't do that because who knows how things will actually play out. But I'm feeling and sensing and seeing enough indicators to say, well, whatever trend that we've been on is now shifting and a new trend is emerging. And that almost like dovetails into our question or our thought for today. Whatever this new thing is, because we know when we go through economic disruption, there's always some kind of a new normal that emerges. And then we say, okay, what does it look like to sell into that environment? What does it look like to win projects, to thrive? What do we do? So that's kind of the question I want to start with. Where do you want to begin processing this for everyone here?
Yeah, I think for our point of view, we have to strategically think through what are these opportunities and how can we be smart doing it. So when we're right now, where these opportunities will show up is in our sales cycle. We've been talking to you for the last few weeks about marketing, getting yourself out there, making it be known. And I have a feeling that's still some of the results you're getting is that marketing work is creating curiosity right now, which is perfect for this season. But you will still be getting the sales season, which is really the process of working through what an engagement would look like. What's the scope, parameter, deliverables, payment terms. And in that sales cycle, we don't want you to feel desperate so much that you're compromising and giving up things that are still very important and viable to keep you viable as a business. So the pattern seems to be right now is that the requests in the sales cycle are going to be different requests than you're used to. Joel, I think you gave an example earlier about a client that was awarded a project, the same one they did last year, but this year it's half the budget.
Well, yeah. So I want everyone just to let's use this one example and just in a way ask yourself, what would you do, right? So imagine if you have a client in big tech that you've done project after project after project after project, and then it all stops. And you're waiting and you're waiting and you're waiting. And then they finally come back around and they say, okay, we've got some budget. We're ready to do the thing we did last year for the whatever event. But we have half the money. Or what probably happens is you would bid the job just like you did last year. Say it's 100,000. And then they come back and they go, there's no way we can spend that. We're actually talking to another vendor that we just met that said they can do it for half. Why would we spend 100 if they can do it for 50? And here's where you're like, Tim, your mind, everyone's mind here, you immediately start going to the commodity thought called, if we were going to do it for 50, how would we do it? And let's compete on price. Let's compete on price. The client asks you, well, if I go with the people who can do it for half as much, is it going to look about the same as what you do? And their answer is like, well, ours would be a little bit nicer. And I'm thinking that can't be the answer. You cannot say spend twice as much and it'll look a little bit more cinematic, right? We'll shoot on Alexa instead of Red or something like, no, forget about it. Because I said, the reality is you have to think in terms of what is the new normal that we would do at that 50,000 that we haven't thought about before because we didn't have to? We kind of got lazy. And what is it that the younger, shrewder, more clever, more innovative, whatever youngsters is often who they are, what is it that they're doing for half the budget that is solving the real problem? And if we can't wrap our heads around that, then we might as well start closing up our doors, because that six-figure budget, it isn't coming back. Like that cheese moved. So we either stay here at this part of the maze and die, or we start going around and exploring other parts of the maze and find the new normal and how to do it. So that story, I think, it's really tough to take those lumps, but this is also just the journey we've always been on in the creative industry, is how are we going to always be doing more amazing stuff with less and less?
Yeah, I think that the opportunities that we're seeing that are changing, it's hard not it's hard not to compare it to past experiences instead of just looking at it in its current present context and ask yourself the question, does this client qualify? Does this project qualify? Does it get the results we want from it? Will the client be happy with the way we're going to pitch it? And if that's their budget, okay, why compare it to something you've done in the past? If it's legitimately qualified now, that's great. You'd greenlight and go for it. It's our bias that we carry into the relationship that might harm us. And I think, Joel, the reason you say something like youthful or younger is the thought that it's a fresh mind in the same problem, instead of a mind that has experience in that comparison. But we're not saying that don't win in that opportunity. What I like to say is, like, give the client what they're paying for. If they're going to give you a $50,000 budget, do something within $50,000. That's what they're asking for. That's what their budget parameters are. They still need the results, and the creative, subjective nature of what you deliver is your magic power to get them the results you want to. We know a lot of value shows up in storytelling. A lot of value shows up in creative execution. It doesn't have to be more bodies, more frames, more time, and more deliverables always to get the results your clients are looking for. That's what the pitch process is about, to come to terms with what their parameters are and your creative execution for those parameters.
Love Phil's question here. Thank you for that, Phil. How do you know if it's true or if they're negotiating? I have a pretty simple answer that, and you learned this in Jumpstart, Phil, right? You anchor and present options, meaning here's an absolute mind-blowing, no excuses, no apologies solution. And maybe that's 6 figures. And guess what? You also offer a mid-level and a low price, but all the solutions are what you're great at doing, right? They're all good solutions. If that client has the 6 figures and they hear your mind-blowing proposal, they'll go find the money. If they have the money, they will go find it. So that's, in a way, how you come out, is blow them away with the incredible brilliance of your creative solution that is very, very expensive. And you watch, sometimes that client will say, let me go talk to my boss. I'm meeting with the CMO next week, and he needs to hear about this. She needs to think about this. So there's techniques, right, to sell into this economy, even though, Tim, we would say it's a time of lower budgets and tougher to get cash and all these other things.
Yeah, and I'd say, negotiation is part of the process. So negotiation is also true, right? There's a reality of what they're trying to figure out to make them successful. And I think when we're in the process negotiating, we want to understand what success looks like for both sides and then be able to qualify that lead. Specifically, though, if something's coming down the pipe that will not work for you and you really, really need the job, that's a threat to you in the long term, that you aren't going to be able to, you can capture a little bit in the short term, but you have to have a long-term strategy. What we don't know right now is, will those projects keep on coming to backfill the gap you're making by taking an unqualified project? That's our next warning, is there's a real cash hit here. If you are compromising on price and compromising on payment terms, and you don't have the ability to finance it, you can get yourself into really, really big trouble. We often can take a hit on some projects because others are coming in. And when you're establishing a new pattern, you don't know what your gamble is or how much time you're trying to stretch it out. So there's a really important element to cash flowing these projects as much as there is creative execution, negotiating, and bidding these projects. And this might be the moment of innovation for resources. Who are you working with? What opportunities you're creating for others, and how you get projects finished in that creative execution side. That might be where a lot of your research should be done right now. What are your resources and how do you get the projects done with them?
So what I'm hearing you say, is if that big tech company that gave you 6 figures last year and is offering half as much this year, you have this tendency to think, well, let's take the job and we'll just do our best because that's what we do. Right? Like, well, we shoot with these level of directors and these cinematographers and these gaffers and these craft services and da 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 la la la. And that, I would argue, that's over delivering. That's giving way too much. But we get stuck in this. Well, that's what we do. That's how we produce the quality we produce. And I think our encouragement is rethink that. Like, challenge all those assumptions, because there's a whole nother way to resource that. I'm thinking of like the production company that's going to show up and say, we'll do it for half the budget. And they don't even know what a gaffer or a grip is because they don't live in that paradigm.
Yeah.
They don't live in an AICP bid line by line, right? A through K. Like, they just show up and they shoot and they edit and they direct. And I don't know how they do that, but wow. I want to get to know those resources.
Yeah, I agree. Like there can just be the rates or the crew that you're working with to get it done as part of your resource exploration. And therefore, how you're making the puzzle pieces match. I guess there's an element to me that wants to say, when a client gives you a $50,000 opportunity, they genuinely want this done. And that pent-up demand that they're trying to execute now, because they know the problem they're giving you. They're giving you less money than they used to give you to get the same results. It's not confusing to them either. So this is the moment you have to reset that relationship. And this is where you're going to show your genius that you're capable of doing other things and rethinking the problem to get a different result. You're kind of showing your strategy side and putting it out there to say, I'm a good partner. This is a good working relationship. We can keep on working together and establish that now. But you don't want to undercut yourself today, not knowing if you can make it up in the future. So that reset for you is a great opportunity for you to steal the moment and create the right healthy parameters moving forward. There's even a genuine nature to some of your clients that you have good working relationships with to be transparent. You can process through some of the problems that they currently have with their budget and how their budget might affect what you're getting done, and have a very open and honest conversation. That doesn't undercut you. That often infuses you to that person in the long run. So that's where a short-term loss can be a long-term win, because you're creating long-term fusion with you and a working relationship.
You just reminded me that I'd forgotten there was a part to the story I was sharing about the big tech story, right? With we have half the budget. Was I encouraged this owner to have the why conversation, which is simply when your client calls you and they say, hey, Jed, I need video. And you start to spin up your proposal machine called, okay, I'm looking at, I'm bidding and doing rates and all this other stuff, without pausing to ask the question, why do you need a video? Oh, because we're trying to move this needle. Well, why would that be important? Why would that be valuable? Why now? Why us? Why do this at all? Because in this story example, I remember they went back to that client and they said, why are you even doing this video this year like we did last year? And they said, oh, this is just a pilot. It's just a test. And we realized, oh, well, no wonder they're not putting the same resources to it, because their other initiative is the one where it's going to go in front of millions of eyeballs and it has to produce some sort of result. So all of a sudden we realized, if we don't have these why conversations, we're not getting the deeper needs. And I like what you said, Tim, in a strategic way to really solve the problem, perhaps in a new way, and create a new relationship, a new opportunity. I don't know, maybe I'm just being, again, my optimism's getting better of me.
Well, what you're doing is you're just opening your mind up to opportunity, right? That's an important element here. But we should also warn people that, this new economy that you're going into, Joel, you're saying the new normal, has other things that have yet to be revealed that we know are coming soon. For example, the Writers Guild strike is going to have an impact on the entertainment industry. And you might think, I don't do broadcast television, I don't really care. But there are commercials that attach to broadcast television that will be impacted by audience and audience demand. And the type of elements that are being created to make up for that Writers Guild gap, if it happens, can give birth to new elements of an industry, new elements of entertainment, and new opportunities as well. So that's just one piece. The Disney layoffs are affecting. I've gone on phone with clients where like their direct client gone, laid off. So
Right.
you're having client personality shifts and pivots, and every person has a bias for or against you. So this is a moment to get out there and meet people. This is a total listening tour moment. Just get yourself known. Go, plant some seeds and see what comes of it. This is not something to wait through at all. And then lastly, the TikTok censorship. That's going to be a pivot in the social media marketing space as well. These are just big, gigantic things that people are talking about. But then there's all these small nuances in between in corporations of what layoffs mean to the surviving members, what budgets impacted as they spend things out, how people are going to make decisions differently. That's what we're navigating and pursuing ourselves through. That's why direct sales, I'd still say right now is not the time to just go, hey, I'm so sorry you lost your job. Do you know anybody else that's hiring? Like, I think you got to be sensitive in saying, okay, as much as the opportunities are coming in, listening is still a bigger need right now in the negotiating than pushing yourself in front of someone. Now, if you have a cash issues, it's really important to get yourself out there to as many people as possible. I get that, but let's not be insensitive or push too hard and lose future growth because of the immediate need.
I'm thinking of a few folks in the industry that have said about the recent layoffs, right? I think it was yesterday or day before that Disney, ABC, ESPN, right, laid off, I think about 3%, which isn't a really large number, but still there are some people that we know that were impacted. And the opportunistic mind will say, well, the work still needs to get done. So now's a great time to reach out to the people at Disney. Be that as it may, to your point, the best message to send can often just be like, I heard there were changes. Are you guys okay? Have you been disrupted? How can I help? That's it. And be a network, be a resource to people, because it's a long game that we're in. And at the end of the day, we're all going to work together, and we're going to work with the people that we know, and especially the people we like, and most importantly, the people we trust.
Yeah. So this is the pent-up demand that we've been feeling. It's now acting itself out, in front of us, and it's coming in our front door. This is a chance for you to be the adult, to be the expert, be the listener, be the person, the problem solver, and engage your client and let them know you are the right person to be processing with. As much transparency as possible, known elements of possible, and working with them, with the need to push back. When it's not qualified, you have to also push back. Don't just be run over by these opportunities, but stand there firmly knowing that you know how to get it done and done right. And anything that you're compromising right now, just realize the long-term effect for it. It's going to have a 6-month impact on you. You better be understanding that 6-month impact and be riding out that wave for as long as you're making it, so that we're not midsummer when all the big opportunities are coming and we're super busy. We're absolutely cash poor because we spent way too much money at this moment, and now we can't take on even a larger project to finance it for 45 days, because we've been financing 4 projects for 3 months and just totally all the wins out of our sales.
So quick update as I sort of pivot to wrap this up. So Tim, we've got a group of owners going through Revolve right now. And I can't remember if it's this week or 2 weeks from now when we're going to go through this concept we call the value pyramid, which is really like, if we're going to pivot, what's the methodology we're going to use to figure out and create new forms of value? It's kind of an experiment. So I'm really curious, but I think everyone is going to be really hungry right now to be like, you know what, if I am pivoting, what's the thinking? What's my strategy on how to pivot? I'm going to be super hungry to see what people come up with as we go through that experiment.
This week's cash flow. So it must be 2 weeks from
Okay.
now. Yeah.
Okay. Thanks for the reminder.
Yeah. But yeah, when we like the value pyramid process, just so that, and what I always think of, I want some ideas in my head while I'm talking to clients as a filter. So I know the origins of thoughts, and I can use that origin as I'm talking so that I'm navigating the conversation the way I want to. So some of these qualifiers, like the 3 R's or the value pyramid pivot, are things that when we're talking to clients, we can understand what we're negotiating to get the win-win out of it. That's our desire.
I'm chuckling because cash flow, it's couldn't be more timely, because I'm thinking of, I don't know, in the past week, I've looked, and this is Joel, not Tim speaking. I've looked at more cash flow statements to make decisions, just because people are like, man, it is lean, it is thin. And I have to figure out not just what I'm spending, but when I'm spending or when I'm cashing those checks. And man, the tools have been really, really helpful. So
yeah,
here we go again, Tim. We're going to do another round of building a bunch of cash boards.
It's my life calling. What else am I going to do besides build? If I had a greatest hits, this would be one of my greatest hits, the cash board. No doubt about it.
Right. All right. Well, thank you everyone for being here for this edition of the weekly briefing. We exist to help you thrive in not just your business, but also in life and in your career. And Tim, I think I'm excited because there's some things in store in the next month or so that I think are going to really help people more and more understand this movement that we're helping foster of every creative business on the planet needs help and support to crush it. And that's what we're all about.
I said this in the post, and I just want to say it live too, is that what's most exciting is that the conversation happening in community is happening inside a community where you're there listening to each other, supporting each other, and can verify things. It's really exciting to see this community come alive, and the community members using it in such a way that they're finding benefit in relationship with one another. It's just awesome. So we appreciate that. We're proud of you. We're thankful for you. If you're not a member of community, you need to join right now, revthink.com/community. Just get on and join the discussion, be part of it. We already have resources, tools, things to download, videos, information that we can put out there for you as well. And then if you know somebody who's not part of community, grab them and bring them in too. It feels like the more the merrier right now in this conversation. So please help and be part of community, participate. Joel, I looked at the numbers. It was out of 500 members, nearly 300 members have been active in the last 14 days. So we're way above 50% in activity inside a community for the members. So very relevant conversation taking place. It's like a party that everyone wants to go to right now. So come join the party.
I'm kind of blown away by that. I know it's good, but come on.
Yeah.
More than half. That's fantastic. All right. Thanks again, everyone. We'll see you next week for another edition of the weekly briefing, we will see you in the community and hope you join that conversation. So thanks, Tim. Thanks, everyone. Bye for now.